Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live rates, and then we're going to be talking about short-term rental property loans. So, great topic here for today. We'll get started here in just a moment. Hope everyone had a great weekend. Interested to get back to it here today and see what the rates are looking like. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in, and we'll get started here in just a moment. Appreciate everybody tuning in nice and early. And it looks like we're live on all the different platforms, so we'll go ahead and get it started here. Go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as you tune in and as we go through the presentation here today. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates, and then we do a deep dive into a different loan topic. Today's topic is going to be short-term rental property. So because we specialize in non-QM loans here at the Mortgage Calculator and we work with a lot of investors, short-term rental properties are definitely something we're very familiar with. So I'm sure Jose has some great examples for us to check out here shortly. But before we do that, we'll do what we do every morning, which is pull up our rates. So Nick, if you're ready, let's go ahead and pull up the pricing and see what it's looking like today.
All right. So before I pull this up, as I do every day, let me give the speech because we're going to see all the screen or all the rates on one screen here. So we will compare all of their different standard programs for today. It is May 20th, just after 11 a.m. Eastern. So all of our initial rate sheets are live here. We'll set up a scenario to compare across all the programs. We'll set up a $500,000 purchase, $400,000 loan amount that corresponds to 80% loan to value, 20% down payment. We'll set all the demos here to a 760 estimated credit score and an estimated 40% debt to income ratio for any that require that. And for our DSCR loans, which we'll talk about here in a minute, we'll use a ratio of 1.5. So those are the basic settings. That'll allow us to compare the APR across the programs and give us the best options. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. So let me share my screen here. And first up on the list, usually our first option, we send most customers for a primary home, 30-year fixed conventional primary. So today rates come in at 6.624, final APR 6.953. So for the last few months, definitely well over 7 APR. Now we're under 7, so that's amazing. Definitely recommend all our customers that have been held out, definitely make a move. Now, if for any reason our customers do not qualify for conventional, typically the next option we want to present is an FHA option. FHA allows more leniency on credit issues as well as a much higher debt to income ratio they allow. But we set everything the same so we can compare across the programs. FHA for the same exact scenario comes in at 5.75 rate. Final APR 6.723. Remember, this includes the upfront and yearly mortgage insurance that is required. So you compare the APRs here. FHA is a touch cheaper than conventional if our customer qualifies for both. So definitely check those out. And notice FHA's APR is definitely right in the same ballpark as conventional for our customers that need to use it, which is awesome. And next up is our VA option, only for eligible vets and active service members. If you are eligible for this program, pretty amazing. Rates as low as 5.875 today. And the final APR comes in at 6.195 because VA does have only a funding fee. So this is a great option for our customers that qualify. Notice it is the lowest APR that you see. So all of our veterans and active service members that are eligible, definitely recommend the VA option. And now we'll scroll down to the next row. Our last government option here is USDA. That's only for USDA eligible properties, which corresponds to their map, typically rural areas. So if you are looking in one of those areas, definitely a great option. Rates for USDA come in at 5.875 today. Final APR 6.617. So typically our customers looking for USDA might be comparing it to FHA, which USDA is better. If you look at the APR, and to conventional, notice it's better than. And now we'll get an option. As Kyle mentioned before, we specialize in non-QM loans. So if our customer does not qualify for any of our options, most other banks or lenders may have to deny that customer. That's where we love to present our non-QM options. So first up, 30-year fixed alt doc primary. This would typically be a bank statement or similar option. We also have 1099 programs, P&L programs, asset-related programs, all kinds of options.
Well, it looks like Nick got frozen there. Uh-oh, are you there, Nick? Huh. I think Nick got frozen there. Wonder if he's gonna come back or maybe drop off here. Unfortunately, I can't control the screen. So I guess we'll give it a second to see if Nick can pop back on here. Let's see here. Well, while we're waiting, I guess, Jose, why don't you talk about just the short-term rental loans? You can do your intro here before you pull up all your stuff. Oh, here we go.
See me?
All right, you're back, Nick? Yeah, okay, you're back. Go ahead.
My internet went out. Where'd you lose me?
You were starting to talk about the non-QM products suite.
All right, cool. All right, so if our customer doesn't qualify for any of the agency or government options, typically we'll want to present a non-QM option. So first up here, alt doc for primary homes. That typically means bank statement loan. We have 1099, asset depletion, P&L programs, all kinds of different options. But if we compare here to conventional, 6.99 rate, final APR 7.344, it compares, it's less than half a point away from conventional. So great option if our customers need it, still within about a half a point of conventional. And now we'll move on to our investment options. So first up, for an investment property using alternative docs, again, this would be bank statement or similar. Rates come in at 7.5 today, final APR 7.793. So let's scroll down to all our other investment property options. So the only agency option that we have here is conventional. Remember, government programs do not work for investment properties. So our 30-year fixed conventional option comes in at 7.375 rate, final APR 7.726. So notice the non-QM and conventional are pretty similar here when we compare them. But definitely recommend all of our investors out there check out our favorite program, our most popular program, the DSCR option. So DSCR stands for debt service coverage ratio. No income, no employment needed. We simply use the estimated rents to determine a DSCR ratio, as I mentioned before. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio over 1, which is preferable. For our demos here, I set the ratio to 1.5 so we can see all the options pop up. So first option here is our DSCR 3-year prepayment penalty option. That's the most standard. Rates come in at 7.25 and final APR 7.587. So conventional to use, no documentation as far as employment and income. So great option for our investors out there, and it actually beats conventional. And to sweeten the deal, we even have our 5-year prepay option coming in even lower, rates as low as 7%, final APR 7.316. So that blows conventional out of the water. And final couple options here. We have a no prepayment penalty options for investors that do not want a prepayment penalty. That's no problem. It does cost a little bit more. Rates as low as 7.875 here. Final APR 8.231. So notice that is more than conventional. So definitely recommend our investors add a prepayment penalty to get the better rates there. And the final two products that come up on our screen, 30-year fixed second mortgages. These are very popular as customers do not want to touch their low rate first mortgage and may still need some cash out. This allows them to get a second mortgage with rates much lower than a HELOC and non-adjustable. So 30-year fixed second mortgage for a primary home comes in at 8.625 rate, final APR 9.030. And for an investment property, to get a cash out second mortgage, rates as low as 9.875. Final APR comes in at 10.154. So great options here for our standard options. But now let's get into Jose's examples where we have our non-standard options. And today, let me switch spots. Today we're going to be talking about short-term rental properties. So DSCR options, you see those are the standard, always just one unit. Cookie cutter standard scenarios that we're able to pull up on the live pricer. But today, Jose will go into our specific DSCR options and other examples we can use for a short-term rental property. Typically, very popular request to use the short-term rental income. And to do that, we have some DSCR programs, but it is a subset of those. Not every program allows it. So Jose has our specific options here that can allow us to do those types of programs. So are you ready, Jose? Let's talk about these options.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. We love our DSCR product, and definitely we love combining our DSCR product with short-term rental properties to come up with an amazing option for our investors. As we all know, short-term rental properties is the fastest growing segment of investment properties, both condos, townhomes, single-family homes, even multi-unit buildings are being used for short-term rental with much success. The beautiful thing is that our DSCR products, with their very flexible guidelines for determining the income stream of the property, is the perfect solution for our short-term rental investors. We have DSCR options that allow the use of AirDNA when the property is being purchased. AirDNA is a database that will determine the short-term rental income of a property based on the area and the property characteristics. So very good option. Also because we have our AirDNA that goes up to 80% LTV. Now, the one thing when using AirDNA, be aware that the guidelines are usually going to call for a little bit higher DSCR. But if using the AirDNA, you should get an amazing DSCR for your property, as long as there are AirDNA comps that are in reasonable proximity to the subject, similar as when you're getting comparables for long-term rent, right? It can't be 10 miles away. It has to be reasonable proximity from the subject, and it has to be similar design and style of the subject as well. You're not going to really be able to compare a home that's 100 years old to a newly built brand new home with all the different characteristics that a brand new home has. So let me share all the options with you today because I have quite a few options. Now, here's our best option. Now, this one is where we go outside the box in what DSCR allows us to do, right? In this case, we can go up to an 85% loan to value. That's the max LTV for a DSCR purchase. However, for the 85% LTV option, we are not able to use short-term rentals like AirDNA or Revenue Report and stay at the 85% LTV, which is the benefit of this program. However, DSCR is not going to penalize you because they will let you use long-term rent on the purchase. And in this case, at an 85% LTV, you see some amazing rates with 8.375 being our lowest cost option, and you can buy that down to 7.499. Not too shabby for a 15% down DSCR loan. So now here's where we start definitely flexing our DSCR muscles. Right here at 80% LTV, we are allowed to use AirDNA for this particular option here. This one I have 3-year prepaid. All my examples today are with a 3-year prepay, even though, as Nick mentioned, 5-year prepay will give you a little bit more favorable pricing. So again, as I mentioned, the minimum DSCR when using AirDNA has to be 1.5. So here, look at these amazing rates, right? 8%, almost at par. And we can buy that down all the way to 7%. So lowest cost option, 8%, lowest rate option, 7% using AirDNA. That is every investor's unicorn. So now next example, 80% LTV DSCR purchase using revenue reports. Now, if it's a purchase and you're using revenue reports, that means that obviously the seller has been operating the property as a short-term rental. They are going to average the information over 12 months. So you are required to provide 12 months of information. Again, great rates, 8%, lowest cost option, 7%, lowest rate option for this great DSCR short-term rental purchase option that allows the use of revenue reports. Now, AirDNA, obviously a little bit better because what if you're buying a property that the seller's not operating as a short-term rental, but you with your short-term rental experience and acumen know that you're going to hit it out of the park with that short-term rental property. So now DSCR 80% LTV using long-term rent. Now I showed you the 85% LTV option using short-term rent. Now you can see here the 80% LTV option using short-term rent is again the same great rates we've been seeing. 8% lowest cost option, 7% lowest rate option. This is for if short-term rental revenue reports aren't available, or if AirDNA comps are not available in a close enough proximity to the subject to make them usable, then the long-term rent would be your option. So what about those properties where you don't have the favorable AirDNA, the seller's not operating it as a short-term rental, so you don't have revenue reports? It's a great property in a great area, but the issue that you're having here is that your rental comps don't support a value of at least 1.0, right? But you know it's going to be a great property with your experience. So we do have an option when the borrower wishes to proceed. We have our DSCR 0.75 to 0.99 option. For I would say for that trophy property, right? Great property, you really want it. You know it's going to make it. You don't want to be held back. So 25% down. That's all you need for a 0.75 to 0.99 DSCR option, and pretty good rates. Actually, amazing rates considering your DSCR is below 1.0. The rate is roughly a 0.5% higher than the option that we just saw with the DSCR at 1.0 or above. This one, lowest cost option, 8.5%, and lowest rate option, 7.5%. But remember, this is at a 75% loan to value, whereas the other options were 80%. And like they say in those commercials, but wait, there's more. Here we have our short-term rental DSCR purchase where the debt service coverage ratio is less than 0.75, right? This could be that amazing property, waterfront, ski slope on the base of the mountain, stuff like that, where it's going to be selling at a premium. You may not necessarily have the comps, but you know that you're going to be able to operate it successfully. Well, we do have that option where the DSCR is less than 0.75. Again, all these examples are with a 3-year prepayment penalty, 75% LTV, still the maximum LTV for this option, right? And you're looking at 9.999 as your lowest cost option and 8.374 as your lowest rate option. So that is pretty amazing considering we're at a 75% LTV, 25% down, and our DSCR ratio is less than 0.75. And if we put a 5-year prepay, you'll probably get a half a point lower on the cost. So our last examples here, let's show you some refinance. So now this is our short-term rental DSCR cash out refi. So in this case, we're going to use long-term rent, and you have 8% as your lowest cost option, 7% as your lowest rate option using long-term rent. Because if the long-term rent gets you where you need to go, then why worry about having to provide additional information? And the good thing is that we have options that you can use the long-term rent regardless of the property use. Now here is 75% LTV using short-term rental revenue reports. Again, great options here. 8% almost at par, and you can buy that one all the way down to 7%. And our last option here is our short-term rental DSCR cash out when you are at a 0.75 to 0.99 DSCR. And again, great news is that we can reach 75% loan to value on this option. Our lowest cost option, almost at par, is 9.49%. And with this super deep rate sheet, we can buy this down all the way to 7.49% for our 0.75 to 0.99 DSCR option. So like you saw in today's episode, many ways to reach the objective when you have a short-term rental property that's either a refi or a property that's going to be used as a short-term rental property. There's many options, including Airbnb, short-term rental revenue reports, and long-term rent. So look forward to helping you structure your short-term rental property loans.
All right, so let's see. I do think we have a couple of questions here, so we can go ahead and pull them up here. One moment. Let's see. Okay, first question. Why is a background check so important for a DSCR loan?
Well, that's a loan type with minimal documentation to begin with. So much is riding on the borrower, just as a person, especially if you're using an entity, business setup. They, part of the underwriting guidelines for those programs have probably involved the investors on the loan wanting that type of information. I guess they just want to feel secure about the moral integrity of their borrower if they're not up to any funny business, and that's probably one way to weed out the undesirables in this equation.
Okay, let's see here. Looks like we have another question. So the question is, good morning. Can you use this for an owner-occupied home that uses it as an Airbnb from time to time, or does it work also for owner-occupied 2 to 4 units?
Good question, but because we commonly have this question, especially when referring to the 2 to 4 unit, because maybe we'll have the owner in unit A and unit B, C, and D rented, but unfortunately, DSCR loans can never or should I say, properties that have a DSCR loan can never be occupied by the owner, nor family members, nor friends. It's a pure investment loan that goes for multi-units as well as a 1-unit property where the owner may rent it out, short-term rental, when they're not occupying it. DSCR loan would never be applicable for those. And the borrower's got to beware, because at closing, the borrowers do have to sign a couple of documents there attesting that they understand that it's a fully 100% investment, and they can never occupy the property, nor friends or family occupy the property.
Okay. Looks like that is it for the questions, but definitely appreciate them. Those were great questions here. So remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then we do a deep dive into a different loan topic. So we'll have a new topic back for you here tomorrow. We appreciate everybody tuning in, and we'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live.